All right, let's go over Hedera. Here's the update for March. As of right now, I'm going to give you some levels to watch out for. So starting on the 6-month chart, you can see how right now in this current candle, all right, the first 6 months of 2025 is what this candle represents. So far, we have gone down to hit the high of the first 6 months of 2024. Okay, so you can see the high on this wick. We have come down to tap into that. On our current candle, you can see that we have already taken out the previous candle's high, and ever since then we've just come back down into the range of the previous candle. Now, the setup for this current time frame was internal to external, where price left all-time high, came down into this bullish area of inefficiency, created a swing low, and ever since we have been able to get a candle closure outside of that area of inefficiency, and now we're kind of just hovering up here waiting for price to get to the target, which is all-time high at 57 cents, just a little over 57 cents. All right, as of right now, the structure still looks strong and it still looks like we can get up there, but there are some things on lower time frames you want to keep an eye out for. I was a little disappointed to not see anyone from Hedera at the crypto summit. I saw that the CEO of crypto.com was there. That's great. Brad Garlinghouse, a lot of other individuals, but from my knowledge, I didn't see anyone from Hedera HBAR. All right. Still surprised that Hedera has not been announced for the crypto stockpile, but it is what it is. All right. I want to get into this breakdown and show you guys what I'm looking at. Dropping down to the 3-month. You can see how that looks on the 3-month. All right. So right now, what I'm watching is to understand if price wants to move off of the 3-month chart or the monthly chart. It's going to be one of these two. All right. If you look at the current 3-month candle, this will close when March ends. All right. So when this month ends. But right now, as it stands, we've got this large area of inefficiency that can still be tested if March closes the way it is. All right. So if we close inside the range of the previous candle, right, even though we've already taken out the high, if the body of this current candle closes within the previous candle's range, it's likely that we can drop into this area of inefficiency, such as doing something like this, test it, and then push up higher. All right. Now, and for that to happen, that means price would end up going below 17.5 cents. All right. Now, no one likes to hear that, but if it's what's needed for us to go higher, then that's what's going to happen. All right. I'm not saying that's what's going to happen. That's just the first thing to watch out for. Remember, it's going to be the 3-month or the monthly time frame that dictates the very next big move. All right. So from the 3-month perspective, we have either got the liquidity needed to go higher by hitting this previous swing high. All right. So that dropped down there, or we haven't got enough liquidity and we're going to close like a doji and then drop down into this area of inefficiency. I'll just draw it out really quick. It's a large area. All right. Over the next quarter, we would drop down into this area of inefficiency and then continue higher. Now, if you just take a look at the last 4 candles, 1, 2, 3, 4, this is a one-sided move structure. These 4 candles are showing me that the market is likely only to move in one direction, okay? And that direction is up. It's unlikely that the market is going to drop all the way back down and take out this low to invalidate these 4 candles, creating this bullish structure, okay? In order for price to come back down below here, which would be underneath 4 cents, something literally catastrophic would have to happen. All right. Is it possible? Yes. Is it likely? No. HBAR fundamentally would literally have to have some type of horrible news come out where it just breaks. The end of the bull market could also be a reason for us to revisit 4 cents and break this structure. But I do not think that's going to happen. All right. The structure is extremely strong on this current time frame. We are still en route to all-time high, but again, it's based off of 3-month and 1 month. All right. So now that we've gone over the 3-month, let's go over the monthly. On the monthly, you can see that we are already in a bullish inefficiency. And if you look right here, February was the one that dropped down into that inefficiency and we closed inside. So you can see how we kind of overshot it a little bit. Price dropped down to hit that previous swing high. And ever since hitting that area, we've come back and closed inside the gap. Now, what I'm expecting price to do in this current month is to get out of here. I want to see price come back up, get above its current high of 28.5 cents, and start heading towards the previous monthly swing high, which is at 40 cents. Getting a strong close above 40 cents would definitely get us right up to where all-time high is as the next target. But that's going to be the first step. Here's the issue. If price doesn't get above 28 cents and pushes closer to 40, then that is a telltale sign that the market wants to move off of the 3-month. Why would price want to go from where it is now lower? It is to go down into that area of inefficiency that I spoke of on the 3-month. So this is why I'm saying it's dependent on the monthly or the 3-month. If this monthly imbalance holds, then we're not going to revisit 17.5 cents, right? Because at this point, price can start pushing higher, filling this wick in, and then hitting external liquidity up here at that 40 cent level. Otherwise, if we roll over, then we can safely say, okay, this is going to be a 3-month setup that's going to be working off of those 3-month levels, which is underneath 17.5 cents. All right. And to be specific, it's underneath February's low. Okay, so we would see February's low get ran out. Dropping down to the weekly, let's look at some more detail. Right now, you want to put this on your chart. This weekly bearish imbalance right here. Price has launched up higher around 28.5 cents, gone into that area, and then so far, last week, swept the previous candle's high, the previous week's high, and ever since taking out that high, we've been distributing that liquidity lower. All right, here's what you got to watch out for right now. We do not want to see this fair value gap hold. In other words, now that we've reached into internal liquidity, sell side liquidity, we do not want to see price reach the external target. The external target, guess where it's at? 17.5 cents. Okay, if it reaches 17.5 cents, then we are officially working off of the 3-month time frame, and we need to watch that 3-month gap. Okay, now if we don't go down here, let's say we fail to go down here and instead we start to push higher and we get a close above these highs, all right, last week's high, then what we can look for is new support. Okay, new support somewhere around 25-26 cents, and then look for that to hold to get us up to the monthly external range liquidity at 40 cents. So that's going to be the very first thing you want to watch out for, is this weekly sell side imbalance. Okay, now dropping down to the daily, and I'm going to put this level here as your external range liquidity on the weekly if this imbalance holds. All right, take a look at this on the daily. This will be the last thing I want to show you, and this will be the end of this analysis. Here's something troubling that I'm looking at on the daily time frame. Look at how we got these bullish candles going up, pushing us into that weekly key level, correct? But now look at the response we get. We drop and enter a buy side daily imbalance. And this is what's troubling. We want price to go up, right? If this is a buy side imbalance, it should be supporting price to go higher. But take a look at the bullish reaction. We get the first bullish candle that pushes up, but it closes inside the gap. The next one pushes higher, but look at the wick. We don't even come near the previous daily swing high. We close, well, we didn't close, we wick up just past these candle bodies, and we close back down. And now price, ever since that happened, has now just been rolling over slowly, all right? So I wanna bring your attention to something right here. February 18th, that low was ran out, and then February 21st, that high was ran out. So you can see how price had a little bit of a range in here. We sweep sell side liquidity, look at the candle bodies closing above, and then we go higher to sweep this buy side liquidity, okay? Creating what looks to be a nice bullish breaker for higher prices. The problem is price pulls back down into this newly developed daily imbalance. We fail to go higher, and now we're starting to roll over. Let me show you what happened on NASDAQ this past Thursday. So I'm over here on NASDAQ E-mini futures, and just watch the drawing. And this is the 15-minute chart. I traded this last Thursday. Take a look. The low of March 6th at 8:15. The high at 8:30. Price sweeps the 8:15 low, turns around on a dime, takes out, it sweeps the 8:15 low, turns around, takes out the 8:30 high. Look what happens. Price forms a newly developed 15-minute buy-side imbalance. Now you would expect this to push higher. Since we've already taken liquidity off of both sides of the market, we expect this imbalance to hold. Look, price goes into this imbalance, closes outside of it. That's great. But the very next candle fails to breach the previous swing high. So this bullish gap is not holding. Look what happens. Price ends up rolling over and it drops, taking out that initial stop hunt and just going lower and lower and lower into a key level. All right. Now look at this. I'm going to circle this high and I want to show you what this high is. This high right here. I'm just going to jump out to the 4-hour chart and look at what this swing high is. That swing high is the high that went into a 4-hour key level before turning around and hitting external liquidity. If I go back over here to HBAR, look at where the high is. The high on the exact same type of behavior. If I jump out to the weekly, it's the high going into a weekly key level. So it's the same fractal, all right? Now what I'm saying here is past price action is not indicative of future events, but the behavior right now looks very similar. The behavior on HBAR appears to be rolling over from a daily perspective. It appears to be rolling over and price looks like it's going to go after this weekly external liquidity down here at 17.5 cents. If that is the case, just want to repeat, you want to keep your attention on the 3-month chart. Now, in order to invalidate a lower move, what can happen is price can come down here and sweep this daily fair value swing low. So it can do this right here. It can sweep this low, and by this low, I mean the low made on March 3rd. It can sweep that low, and it would have to be very quick. Price needs to get right back above that level, trap trader short, and get a close above last week's high, okay? If we can get that, then I'm looking for that new support to form and push us straight up into that monthly level of liquidity, all right? If we can get that, then we're on our way to all-time highs. Otherwise, pay attention to the 3-month chart. That's my analysis, and I will see you guys in the next video.